We come to our final session, which is the growth governance equation. Has a balance been struck? Some persons, mercifully decreasing in numbers, believe that growth and governance are not naturally aligned. Is good leadership the glue that keeps them together? Please welcome our panelists for the next session. Mr. Nasser Munjee served with HDFC for over 20 years at various positions, including as its executive director. Mr. Nasser Munjee was the managing director of Infrastructure Development Finance Company Limited, IDFC, up to March 2004. He was the chairman of DCP Bank Limited from June 2005 to August 2021 and continues as a board member. He is on the boards of various multinational companies and trusts, including being the chairman of Aga Khan Development Network, AKDN. He has been a technical advisor on the World Bank's Public-Private Partnership, Infrastructure and Advisory Fund. Ladies and gentlemen, Mr. Munjee. Our next panelist is Mr. V. Vaidyanathan. He is the Managing Director and CEO of IDFC First Bank, formed after the merger of IDFC Bank and Capital First. After a decade-long stint at ICICI, he acquired a stake in an existing listed non-bank financial institution and guided it through a transformation into Capital First, ultimately merging it with the IDFC Bank to form IDFC First Bank in 2008. Prior to assuming this current role, he held the position of Chief Executive Officer at ICICI Prudential Life Insurance and was a member of Board of Governors at ICICI Bank since 2006. Before joining ICICI Bank, he worked with Citibank for close to a decade. Ladies and gentlemen, Mr. Vaidyanathan. One of the panelists who is also the moderator for the session is Mr. M. Damodaran. Over to you, sir.
It's a great privilege being with both of you to discuss whether growth and governance are facing in the same direction. Are these opposed to each other? Are they traveling in the same direction? Is governance likely to propel growth? Is growth likely to, shall we say, make governance more relevant? And how interconnected are these? So I was reminded of a statement that a former governor of the Reserve Bank made. When somebody told him, you have to address both inflation and growth, he said it's like riding two horses at the same time when the two horses are facing in the opposite direction. So how do you ride those two horses? The challenge is not as big here, but if you look at the history of corporate governance, in the initial years, there were atheists who dismissed governance as being of any consequence. Then we saw agnostics who said, let it exist. We are not quarreling with that, but we will not give too much importance to it. Then came the believers who believed that if you have good governance, it's a necessary condition, but not a sufficient condition for growing a company. You need several other things alongside good governance, which is where we are now. Because in the initial years, even very learned professors asked this question, where is the evidence to show that well-governed companies produce better results and do better for the stakeholders? Now I think we have enough evidence within India, outside of India, to show that governance is important. So my first question, and I'll start with Nasser, is, the way you have looked at the companies that you've been associated with, the groups that you've been associated with, do you see a causal relationship? I know that they're both good things. You need growth, you need governance. Is there a direct causal relationship between growth and governance?
I think, first of all, thank you very much for inviting me here, and it's been lovely to be with you. I've been, for 20 years now, since IDFC, on corporate boards. So I think I've sat on 30 corporate boards Indian corporate boards in these 30 years. So I've seen an evolution. In the early days, governance, as you quite rightly said, was very limited. Sustainability was not even in the picture. And this idea that the businesses have a responsibility to the environments around them, the triple line bottom reporting, GRI, all of that, nothing was there. So in a sense, the whole culture has changed. And today, and when you say governance is important for growth, it's because the world has realized that there's a different dimension of a company. My old professor, Milton Friedman, always said, the business of business is business. Don't get into all this social stuff and etc. You have to serve your stakeholders, your investors. Don't worry about anything else. Just make your profits and that's it. Those days are gone.
Mercifully, we have moved from shareholders to stakeholders.
Yeah. Shareholders to stakeholders. Stakeholders, a whole range of things. But even today, if you look at it, wage labor in the West, you look at Amazon, do they pay their warehouse employees? How do they do it? What is happening? So in a sense, that stakeholder relationship is also very capitalist at the moment. It's skewed towards capital rather than labor. But all of this is happening, at least there's a recognition that it's happening. Personally, I think this causal relationship is now changing very dramatically over this, and especially in the last 5-7 years. And I think with LODR, I was very against CSR, for example. The same idea that you force companies to invest. But today, seeing CSR, I'm all in favor of it. I think it's just amazing what it's done. About $4 billion has gone into CSR funding in India. But more than that, it has made individuals and companies, both management and workers and people, engaged in something around in the societies, because they volunteer, they work. It creates a sensitivity. And I think this whole combination has changed the whole ethos of a corporate. It's changed completely in the last 5-7 years. So I think today there is a very strong causal impact of the governance on companies and companies on governance. I think it's going both ways. Companies are also demanding better governance internally, which wasn't the case in the past. The issue now is finding the right people, the right skills. We've talked about that earlier. These are the early days, I think, still. But there's always a dilemma between growth and governance. There always will be. And unless we manage that, maybe we'll get into that a little later, but managing the dilemma between growth and governance is going to be, I think, a very crucial play in the next few years.
Vaidhi, what's your take on this?
Thank you. First of all, thank you for organizing this, Mr. Damodaran, and great to meet you, Nasser. My quick comment is as follows. The fact that, in 2010, I left ICICI. So I was already in the board of ICICI, running a large bank, a large part of the bank. And I stepped out to start this NBFC. I'm just telling you why there's a strong causal relationship, I'm just telling you. And I've experienced it firsthand. So we had a small company. Small company means like 94 crores of loan book of retail and 1,000 crores of loan book. In financial services, it's quite small, let me tell you. So small NBFC, ridden with legal issues, a lot of bad loans, hardly any employees. And I was trying to acquire that company thinking that I'll go to RBI and try to convert it to a bank. But with all those problems, I tried going to many private equity firms to get equity capital to back it so that I can make some size scale out of it and go to RBI. So the point I would say is that with all the troubles that was there in the company, I used to tell people that, listen, this is business. We may get it wrong, a little bit temporarily, but I will never, ever let you down on governance. And this was my pitch because I didn't have any number. Everything was spreadsheet. right? And spreadsheet, who can fund spreadsheets beyond a point? So I used to tell people that India's opportunity is great, we can build a good business, but I can never go wrong in governance. And, Deepak Parekh actually supported me when one of the funds went and asked him for a reference about me. They told him, look, he's a good guy, but one thing I can tell you, that if you've got to back anyone in the country, back him. Now, Deepak Parekh saying that about me when I was only 42 at that time, it actually was a big thing for me. So my take is that, and then of course, then IDFC happened, and IDFC again released lots of capital. So my experience in life is that whether we have a product ready now or not, but on the strength of image, a reputation, a feeling and a belief that the governance won't go wrong is a very big causal effect.
Yeah.
Are we seeing some kind of a reversal, especially if you look at the US? People, companies, and we heard this mentioned earlier, are scrambling to take DEI off their policies. They don't want any talk about inclusion or diversity. Advisory firms in the US have taken that away as one of the determinants of a business being run well. And a distinguished professor sometime last year, somebody who is respected, with whom I share a name, but then that's all that I share with him. He said that ESG is a feel-good scam. You feel nice, but as far as the company and its stakeholders are concerned, it's a scam. It doesn't add any value. Now, are we seeing some kind of regression? Or are we likely to remain on this path where we tell ourselves, yes, governance is a great thing. We need governance. We need several other things to push companies forward too. Are we understanding this concept of governance clearly? Because half the people think governance means ticking a few boxes that the regulator or the lawmaker wanted you to do. Are we moving in the right direction? Have we come to a pause? Are we regressing?
No, I think we are moving in the right direction. I think the US is deconstructing. It's deconstructing right through. I mean, if the president of the US can say, drill, baby, drill, for God's sake, you are in a no man's land, you know? And this whole thing about immigration, the way they're treating immigrants, the way they are dealing with labor and the unions, the way they're treating, this whole issue of, what do you call it? DEI. Is a regression. And I think it's not something that one would want to replicate. I think the more enlightened part of the globe will not move down that direction. It'll be moving towards the direction in which we have been. So I'm very much, and this idea that ESG is a scam is nonsense. Because today, you cannot have business as usual as you did it 20 years ago and survive as a civilization on this planet. It's not possible. Business as usual is not an option. So we have to now progress. And I think ESG is a way of progressing in a profitable new business model. ESG is not something icing on the cake. It should be defined as actually creating a different business model which is much more efficient than the past. But if you just do this as a do-good thing, it's not going to work. But as a business model, if you do renewable energy, you can see your power costs come down. If you do recycling, it benefits not only society, but you. So you can see this happening. Now, for Indian hotels that I'm on the board of, we're doing this in a huge way, and the impacts are being felt. Not only are you doing something good, but the costs are being addressed. So you actually redefine the business model. And this is the way to go, in a more humane and in an integrated way, where companies are part and parcel of society at large. They are not just profit-making entities exploiting the environment, not counting the costs of the externalities they impose on the economy. That's not possible. That's over. And anybody who says that that's the way to go is in cloud cuckoo land, you know. So I think the US, unfortunately, is down that road, and it's not a model that we should even think about following.
Vaidhi, is there something called a governance premium? Is it a myth? If you look at it from the average investor's point of view, is he or she actually factoring in governance premium when looking at companies? What's your experience?
Very clearly, you know, you've been at the forefront of governance, so you know this really very well. The thing is that, at least, again, I can only talk by experience and not academically. I have experienced this governance premium all the time. You know, for example, you know, when our previous company return on equity was 8%, price to book was 4. Today our bank is running, let me say, 4 or 5% return on equity, which we all agree in the banking system, I understand, quite low. Reality should be like 15, 16. But, and it's quite hard to raise equity, quite hard, right? And we have raised 6 rounds of equity at an average of 1.6 times price to book. We have raised 21,000 crores of equity on a starting equity base of 15,000 crores. That too, when we're posting losses, when we are posting, you know, writing off bad loans and all that, and we are still bringing up the company, return equity is low, you know, everything. So, I mean, what explains it? Normally, you know, something like this could be, you know, so I do believe, people believe it. Just now, last month, we raised 7,500 crores of equity from 2 large institutions. I believe there is a definitely premium, and more than that, availability. Yeah. You know, one large institution, you know, a few years ago, which went into moratorium, etc., they just ran out of equity. They were not getting it in due course in time. So I think the availability is a very big deal. Price of availability is better, and there is certainly a premium. You can see that. I mean, I'm experiencing it.
You are seeing evidence of governance premium in our markets.
I told you, I've raised 6 rounds of equity at a price to book of 1:6. When the price, when return on equity is 4 or 5, it doesn't happen. At least we are benefiting, and of course we are seeing it all around us, right? For the same earnings, somebody's, you know, trading at half the price of the other. There is a value, and I think when you know, but by itself. You know, it is one component, but when coupled with, let me say, good conduct, good governance, let me say, you know, good return on equity, good economic indicators, good growth, good moat, the combo becomes very powerful. But governance is like it's like essential. Yeah. In fact, I'd say that growth doesn't conflict with governance. Probably governance is enabling growth, is the way I think about it.
No, there was a time when people thought that economics and ethics couldn't coexist. Yeah. Luckily, we've moved beyond that. Yeah. If we come to a stage when we recognize that governance is an important consideration. But if you actually look at the way companies address this whole concept, is this a boardroom concern, or does it percolate down the organization?
Sorry, what is?
Governance.
Governance. No, I think governance is now, at least it depends on the group. Now, for example, the Tata Group, the governance is always a major issue. It's always addressed that there's a Tata Code of Conduct, there's a Tata way of doing things. So it helps the companies in the group. But if you're not in a big group like that, each company is now aware of the importance of governance, good governance, and looking for good people to be on their boards. That's very important, because when you look at governance, investor will say, who's on your board?
What are good people to us? Yeah. Because we heard in the previous session, are good people the guys who don't ask questions?
No.
Yeah. Okay.
Well, obviously, good people are the ones that investors would respect to have on your board. So that means people who will ask questions, who have a record of independence. So and they have the requisite experience and skills. I think the market addresses that. Ask those questions. So the board, even if you're an NGO today, the board is very important for the donors. It's always on governance. It's who's in, who's there, and how are you running the show is very critical. Now, for the Arkhan Role Support Program, which I'm chairman, and we have a superb board, we recently got a $7 million untied grant from Bill Gates's wife's firm, So, you don't get this sort of thing when recognition, what is the recognition? It's the people and the work that you're doing. So again, that's what I mean by people who demand, good guys, who demand, who have the respect, of the communities in which you serve. So I think, but then the trouble is also there are a limited number of people who are ready to join boards today. It's very difficult now. If you ask people, you have a board vacancy, it's not easy. There are a lot of people who say, I'm not going to join a board.
No, the good guys are saying no.
The good guys are
but
saying
there
no.
are guys who are dying to get onto boards.
The good guys, I'm saying, good guys are saying no, because they know what the response is. We don't want to do this. Try and get a chairman of an audit committee today. It's not easy. It's not easy. Especially a bank audit committee, it's a nightmare. So, sometimes we should ask the question to SEBI, is that, today, good board members will join the board of maybe the top 50 companies to which they subscribe to the values and the approach. What about the 5,000 odd listed companies? How are they going to find their boards?
2,500 should never have been listed out of those.
All right, so cut out those 2,500. So if it's 2,000 companies, you'd want some of us to actually join those boards. If I was a regulator, I'd say, I'd like the top members of people who've got this, I'd like you to join the boards of smaller companies, because you could help them develop, because you want good governance to spread. Are we helping good governance to spread? Answer, no. Because we are actually limiting the number of people who will even join good boards.
Yes.
So how does that help in terms of governance?
But end of the day, everybody has got to look only the well-known and the available and the high-quality people, etc. How does the country develop 5,000 companies? Every company needs to have 7, 8. You need 5,000 into 5. You need 25,000 members of the board who we want to be good, etc. So end of the day, we've got to develop a way of bringing in good board members and making them good board members through awareness, through responsibilities, and so on avoiding conflicts of interest and so on. Because, even to the previous point, if you notice, even Theranos, for example, or Enron, for example, is a Forbes, whatever they were, best governed company for 6 years in a row. And that was Enron.
Johnson & Johnson
was
rated very highly for governance till they had to pull back things from the market.
But still, at least they did a good
Satyam
job.
They
pulled back on Tylenol. They pulled back on Tylenol, at least they did. But if you see all of the names, like Wirecard, Satyam, if you see ILFS, if you see all these names, if you go and see their annual reports, they talk a lot about governance, but governance is not what they say, governance is what they do. And in fact, if you go and see Theranos, I was reading up the story, that they are saying we want to democratize, health reading across the world, and they were sitting and cooking books about the records, right? And they how it was, and so on. So therefore, it's definitely a lot more than what we say. It's what we do.
Yes.
And that is a very big thing. And therefore, how our employees experience us. How our, and that smell flies. You can't control 1,000 people talking about yourself. How customers experience us, how our informal ecosystem talking about us. And that, I believe, is a huge puller. Just now, in the last round of money we raised, the party the two parties were talking to us. They actually, for our bank, they went and studied about our bank without talking to us. They commissioned an independent study, talked to 1,000 customers of our bank and peer banks, and then came and evaluated us and said, okay, now we're good to invest in your bank. Now, how can I control how they talk about us? So therefore, it is far beyond what we say. It's about what we do and how people experience us.
I think it's interesting to make this point that it is not about what you say, but what you do. Enron's code of conduct was 64 pages. One of the best drafted codes of conduct. And I think almost every other provision in that was violated.
Yes, exactly.
In a matter of few months. So it's not the length of the code, the detail in the code, but I have a related question that how important is communication in promoting good governance? And are we communicating enough? Are we saying the right things to the right people? And not in complex sentences so that they don't understand.
See, it's one thing. Let me start with that. When we say communication, is about both internal and...
Not just Reg 30, because Reg 30 is very...
you know how that is.
Yeah.
So even external communication, I can just say that our own employees often, because let me say now we are much stronger bank, so to say, but in the early stage, so we were posting loss after loss, and Nasir knows for 6 quarters in a row we were posting losses. So how do you deal with it? Either we say to our people, say to the market, this is the reason, this is the background, this is the future, believe in us, we're going to be good, or try to hide. And sooner or later, people figure out who's hiding, who's not. In fact, I have a practice that after every time results come out, good or bad, I actually call for a town hall. Town hall, like nowadays, everything electronic. We call the whole bank on a call. Whole bank. We have 40,000 people on Teams call or any of the calls, and we just have a rapid 30-minute discussion. We shut it 30 minutes, but we do that discussion. So people spot it. And that communication, I feel, becomes important. And that's why I say conduct I'm experiencing is more important than, and communication I do feel is like super important.
Yeah, absolutely.
Nasser,
We do that in
your
DCB.
point?
Yeah, in DCB Bank, we did the same thing. We still do the same thing. And in the early days, when I took over DCB Bank, it was 1 month from closure. We were in such bad shape. And the Al Khan himself asked me to take over the bank and do something with it. We were a 4,000 crore bank, absolutely in the pits. Wow. So I said, I didn't want to do this job. I said, what am I going to do? I mean, there's nothing much I can do. So I took this bank by the scruff of the neck, and we started cleaning up. And again, on the basis of my name, and with Deepak Parikh's help also, we raised private equity, just on the fact that we were doing something different. Sacked the entire management team, built a new team, slowly built the new culture of the bank as we moved along. A totally open, free culture. I believe in ESOPs, we believe in ownership, and I believe in people working with their hearts and their minds. So everybody's part of it. You don't work for DCB, you are DCB. So each one is part of it. And me as chairman, is first name basis, always Nasser, walked around with the people everywhere. I even do customer relations meet. Which chairman of which bank does customer relations meets? Yeah? Right through the country. So it is a different approach. Today we are a 100,000 crore bank, 90,000 crores really. So it's grown from nothing. Gradually, again, using banking 101, nothing fancy. But retail, fully retail. Again, that reputation, again, you talk about governance, it's good governance. Today, there's people waiting to take our equity. There's not an issue. Raising money is not going to be a problem. But the point is, how much do we want to raise and why? At what price? So, in a sense, we are just growing at 20% a quarter, and that is, just gradually. We don't shout from the rooftops, it just grows. And branches grow, the whole thing grows. So I think the answer here is nothing to do fancy, but to do things properly and with a culture. I'm a great believer in building culture within organizations. So DCB culture, my biggest regret was, when I was chairman, to lose my best people. And all the banks were chasing our chaps. They wanted all our DCB. I said, if I lose one of the senior people, I'm really in trouble. And they were being called for interview, and I said, go and have an interview. So they come back and say, what? They're offering me twice the salary, join tomorrow. So I said, well, what's your choice? They said, we're not leaving. This is our bank. There I'll be doing a job. Here we are DCB. You know, it's that whole belonging and etc. So we have not had any attrition at the top right through. HDFC was the same. I built HDFC from scratch. Try and see whether there was attrition in HDFC. Never. Look at the senior people, all remained till the end. Why? Again, ownership culture, very strong. The unions tried to create a union. I was there, this Shiv Sena union and that Datta Samant. It should come there, charter of demands. I should say, all right, get 50 signatures before I even talk to you. They couldn't raise 50 signatures from HDFC employees. They said, we're not interested. So, you know, it's that culture that is important. It's building culture. I think in Tata's, again, there is a culture, but not all companies have this culture, even in the Tata Group. But building culture comes from the top. It's how you really, and that's governance again. Culture is governance.
Culture is governance, yes.
Culture is governance. It's a hard thing to do, but it comes from the heart that you are all part of one enterprise, you are building it. I've just taken over as chairman of Arca Finance, which is a Kirloskop group. Again, we are building the company from scratch. I've taken the ex-TMF lot, which is the Samrat and all his group, because they were TMF was merged into Tata Capital, so a lot of these guys said, we don't want to go into Tata Capital. They came to Arca Finance. So we are building this company again from grassroots, again from culture, very strong culture. I've also taken over as chairman of MMTC PAMP. It's a Swiss gold refining company in Haryana. Again, it's completely changing that culture. When I joined it, it was all over the place. I spent a lot of time building culture. That is a chairman's role, is to build culture.
You did this in a Haryana company.
Yes.
Because Haryana, the one culture that grows the agriculture.
Exactly.
Yeah.
So, you know, it's everybody, you know, in silos and all of that, you know. So when you talk about growth and governance, if you're in silos and you're not working together and you're not prepared for the growth that you're going to get, you have to prepare for growth. You have to. Now, Indian Hotels, for example, in 5 years, it's just grown enormously. 300
Are young
hotels.
people buying into this culture business?
Sorry?
Are young people buying into culture, or are they saying
Absolutely.
we have a transactional relationship with our employer?
Absolutely. I think they buy into the culture.
No, you're talking about your organization.
Yeah.
Generally, as you look around.
No, I'm saying generally speaking also, my general sense is that, you know, in the younger generation these days, they're actually more conscious about some of these concepts, more, not less, right? Yes. Are we green, right? Yeah. Are we, if you actually find plastic lying around wasting it, they'll feel it more than, you know, people in the 30s or 40s. Yeah. I definitely feel that way.
No, absolutely.
Okay. Let's throw this open to the audience. It's the last session, so we need more questions. Right, Suri, go ahead. Yeah. We have proved in the morning that you don't need a mic, but nevertheless, yes.
Yeah, this question is addressed to you, sir, Damodaran, sir. Since you have brought this topic into this thing, has a balance been struck? So do you believe that growth comes at the cost of governance, or governance is an impediment to growth? Otherwise, this topic would not have come.
Okay. Is governance an impediment to growth? It's not something that I believe in, but topics for discussion are not, you know, manifestations of personal belief. They're issues that are generally being discussed by everybody. So my job is to bring those topics here so that we get a larger view. What is your view? Is governance an impediment?
According to me, no. I mean, I just give a simple example. Now you have this Vande Bharat introduced, high speed, 130, 140. So I don't think they introduce it on routes where the tracks cannot take that speed, or the signaling, or even good loco pilots are not available. So growth or higher speed happens only when there is governance. So I don't see that there is a conflict between the two.
Okay. Anyone else? Yes, at the back. I've been a backbencher all my life.
But
so
just as an
I will
aside,
encourage backbenchers.
you can have growth without governance.
Identify yourself and then ask your question.
Right? So it's not necessary, but
you
it's
can
good
have
to
growth
have.
without-
You can have a lot of growth without governance.
Yeah, but one day it'll be like.
One day it will,
But one day it'll blow up, like, driving a car.
One of my things is, in India, we have these Businessman of the Year awards, ET and Business India and all of that. Where is the award for principle-centered leadership? To me, count the number of principle-centered leaders in India of companies.
Maybe there are, maybe we don't look for them, maybe we don't
There
find
are.
them because we are so consumed by the lights flashing on those who are, shall we say, ex officio. Leadership can't be ex officio. You occupy a position, that doesn't make you a leader. You are in a leadership position.
You know what, when we talk of governance, we tend to think of governance conventionally, you think of governance like corporate governance, it like almost comes together. But actually, when we look at governance, at least my experience is that it's at all levels. If you're doing selling, are we doing mis-selling? That's part of governance. If you're doing marketing, are you spamming? Are you communicating, right, properly, right? That's part of governance. If you're doing technology, are we bringing adequate amount of security into customers' transactions and so on? That's part of governance. If you're doing HR, if you're doing are we being fair with our employees, communicating well, etc. We talked about, and so on. We discussed earlier about ESG. Now, we understand in our day-to-day life that, look, environment is playing a havoc. And last year itself, we saw floods here, there, it's affecting our businesses. So, are we enabling business in an environment-friendly way? Now, these are all, in my mind, governance. And we should tend to see them along with corporate governance, because otherwise we tend to see governments more in the head of corporate.
No, that is tick box, what you're talking about, normal.
Yes.
But it's really value systems that go much beyond what regulators prescribe.
At governance at an operating level is the point I'm making, is super important and as much as a corporate governance.
Let's hear the question from the lady. Yes, go ahead.
So I'm Brijbala Batwal from Mahindra Finance. Thank you for a very insightful session. My question is that how much premium do Indian markets or investors attach to well-governed and well-growing companies vis-a-vis companies which are merely chasing growth? And as in, are they priced fairly? And any illustrations will be great. Thank you.
You want to take that?
Well,
because I have a story to tell, but I'll tell the story last.
And maybe if you want to tell the story last. But you see, the thing about, oftentimes the market may mix up the two, right? For example, you may, like to your point, there could be a premium because of growth. There could be something premium because of governance. Now, the truth is that both of them give their own premium, so to say, and oftentimes the signals mixed with each other in the short run. But when you take a longish run, let me take a 5-year, 10-year, if I take a window, then definitely, governance, as we discussed earlier, has a premium, and it begins to show, one thing on this investors, since it's specific on investors, you'll be surprised. When investors are looking at organization to invest, and I'm as I told you, I gave one example, I don't mean only a private equity firm investing in you, even like FII is investing in you, even DI is investing in you. They are going around poking the system. They're coming and talking to some of branch managers and say, how's the bank running? They're going to the DSAs and partners and saying, how's the bank? They're going to technology providers, to IDFC, and saying, how is this bank? So on. So what I'm trying to say is that people are now doing references about a bank all around before taking market positions when they want to take a long-term position. And therefore, I am now beginning to become a believer that, the truth cannot be masked. And we better be good at the core. And numbers and talking and advertising don't work.
Yeah, Rajiv, go ahead.
Sorry, HDFC is a great example.
I'm Rajalakshmi Rao. I think India is all about soul. We all have a soul as a country. And any governance issue is all about how people have perceptions of that company. Whatever be your balance sheet, they may invest in your company, but at the end of it, through long term, as he said, people are watching. You can't just waylay that thinking. You have to have good governance. That's the only best way and a road to success. Of course, you have to run it well, but then people's perception is very, very important. The entire country will stand by that company if some they're being wronged for a wrong reason by any regulator. But people are still with them because they know it's good governance. I think that is very important thing besides all your balance sheets.
Yeah.
Why do we look at regulatory validation to understand whether governance
Sometimes,
is good or bad?
newspapers bring it to their notice,
Regulators
people
are
get
looking
nervous.
at compliance.
Yeah.
They talk in terms of governance, but
Yes.
their focus is compliance,
Yeah.
which I call playing black pieces. You're not making the first moves. So when you play the white pieces, you make the first moves that you're practicing governance. So you got to go not lean on regulators. I hear this very
I agree
often.
with you.
How will regulators ensure that independent directors act independently? You can't. You're not sitting in the boardroom figuring out what questions they're asking. Are they opening their mouths? Going back to the quality of directors, the one person who is a very sort of active in whatever he does, he didn't get any board positions because people said that, he opens his mouth too much. And the poor fellow had to tell them that, look, I open my mouth to consume the tea and biscuits because I haven't learned how to do it without opening my mouth. Right? And you think I open my mouth and therefore I am a bad element in the boardroom. So I think we need to look at, get the right people, have the right value system and do that. Now, if you look at what happened in Satya, after Ramalinga Raju's famous letter of 2009 January, obviously his shares tanked. It had to tank. But there were questions in the market, didn't last too long. For less than 24 hours, somebody said, PwC did the audit. Are all PwC auditees to be looked at a little more carefully with caution? Question one. Number two, it's an IT company, large IT company. Should we start looking at IT companies' numbers with some skepticism, right? Number three, you are from Andhra, of course. I hope there aren't too many people. Raja is a friend. No matter what I say, she will not think badly of me. The third question was, is this a problem we have with entrepreneurs? You know entrepreneurs, of course. Yeah? There are lots of companies. Is this an entrepreneur problem?
Yeah.
So the markets answered all these very effectively within 24 hours. None of those people who had this particular commonality with Satyam suffered in the process. I think people get a sense of what is happening right. But also equally there is this danger of very aggressive communication to mislead the unsuspecting investor that everything is hunky-dory. And some of our so-called good practitioners of governance are guilty of this. How do you manage perception to impact on the way people look at your company when the reality might not be matching the perception? We have issues. Some more questions.
It's not a question, just a comment, Mr.
Disclosure,
Damodaran.
disclosure. You are from the press. You are from the press. You must say that first.
Yes,
Yeah.
Mahalakshmi from Money Control.
I know.
So just
Yeah.
one point, which is that, around this governance, I think just one example I want to talk about, which sort of may change our perspective of how we think about governance, because I've also thought about it a lot. Which is the best governed company in the world? As far as markets are concerned, lots of people in the world will believe that Berkshire Hathaway by Warren Buffett is one of the best governed companies in the world. But you really think about it, there are so many points you can think which will not conform to the ideal of a well-governed country in the world. He didn't announce succession till he was 93, right? Only last year the succession was announced. He still runs the company with with just 4 people at 95. He has been holding such huge amounts of cash, which no other insurance company will be allowed to do. All the board members that he has, Warren Buffett, Ron Olson, so many people, no rotation of members, independence, all the conversation that comes into governance frameworks. None of it, and yet they are, the image of Berkshire Hathaway and Warren Buffett is one of the greatest, icons in business, right? So what is it really? Over the years, I think the trust that a company builds or a leader builds, that is what really stands out. So you could break all governance norms. By the way, even in business, they were the last one to really invest in renewable energy. They were way behind in investing in renewable energy, and Berkshire Energy also. So somehow, I think it's the trust that a company creates or leaders create over many, many years, which you rightly pointed to, Mr. Damodaran, like with culture of the company, how you inculcate all that. That's what really stands out. So somewhere, I think if the focus sort of shifts around building the culture and trust of company leaders within, employees and the ecosystem, it will resonate better and probably solve a lot of, these trade-off that we talk about, because then markets also become more tolerant or forgiving of, if you had some missteps, they know that the heart is in the right place, you do the right things, and you will carry forward in the right way.
You weren't here yesterday. I made a statement that in the beginning God was in charge, then the state took charge and failed, then the markets took charge and failed, and now God is saying, give it back to me. I will manage the system. Yeah, Mukesh.
Mukesh Bhutani. I see an inherent conflict between growth and governance. I'm glad, Mr. Damodaran, you mentioned about 2,500 companies out of the 5,000 should not be listed. Assuming top 200 balance governance and growth, I just wanted panel's view. Do you really think that we have reached a level of maturity where majority of our listed companies do actually balance it very well?
Good question. I don't want to do an audience poll because all of you, I believe, are those that subscribe to the concept of good governance and the importance of governance. In another larger audience, maybe I've done an audience poll and got many people to support what Mukesh is saying, but take your question. Yeah.
So I didn't quite hear you. What were you saying?
I'll answer that. So no, he was saying whether there are about 2,500 companies in India which are probably, like Mr. Damodaran's comment, he said was, I think he said in a half casually when he said they shouldn't have been listed, but I don't think he exactly meant it. Okay, just to start that.
No, it is true that many of them, you see, when long before LODR came and clause 49 was the ruling god at that time, those that were not complying with clause 49, exchanges were very upset with them. I asked the exchange one question. Are they complying with all the other clauses? 49 is okay. Are all these companies, these 2,000 odd, which are dying to delist and get out and don't know how to get out? They say, about marriage, that it's like a besieged fortress. The guys that are outside are trying to come in and the guys that are inside are trying to go out. Right? So it's much the same thing. That there You have companies which got listed because favorable tax regime, whatever, and then they can't comply. They want to delist, but it's not easy to delist. Yeah. So it's a load on the regulatory system. You have to keep track of guys who don't belong in that universe. Yeah, and it's close to 2,000
I was
plus.
hoping you were meant in a lighter vein. Looks like I'm serious about it.
To Mukesh's question, do you have any answers? That is the direct question.
At least I think about these things, in this context. See, end of the day, we are saying that we are like a $4 trillion economy. We want to be a $30 trillion economy in so many, maybe 20 years, 25 years. We want to say that, the Indians should be able to participate in listed equities a lot more. It's not about savings. And we say the world moves there. We know businesses create value. So when all this is true, then we must find a way of, enabling them, bringing them up, educating them about conflicts of interest. You'll be surprised, many corporations or maybe small companies, family-owned companies, they run these, 2-3 family members come together and make a member of board and they put it together. They don't even understand conflicts of interest. So it is not there because they're not grown professionally. For example, one of the things that we follow in our bank, and I tell people, saying that if you're a subordinate and supervisor both go for lunch or dinner together, he says, it shouldn't happen that the subordinate bills and the supervisor pays it off, right? This doesn't look governance, right? So he said, let the supervisor pay and that person supervisor sign it off, right? So it's a small thing like governance, but people are not aware of many of these things because maybe they're just, maybe they're just good business people, but they were not born to this ecosystem of coming up in the professional environment of what is good conflict of interest, what is not, and so on. So the point, therefore, is that my view is that we should find a way of bringing up the curve for the future of India and Indian corporate sector, rather than saying that they don't belong there. Because we need a large listed equity market in the country.
Exactly.
I mean, if you look ahead, we really can't be taking only the best educated professional people running companies and बाकी सब साइड पे बैठ जाओ तुम समझते नहीं हो. ऐसा देश कैसे बनेगा फिर?
My question was not on the delisting part of it. My question was, given where we stand.
It doesn't look like. We agree that it's not that mature. I don't think that we can debate on that at all. I do believe there's a lack of maturity. Otherwise, why would there be so many scams? So why would there be so many thin listed companies, flying off the shelf, in some various prices and so on and so forth? Of course, we're not there. But I'm saying we need to go there. And we need to put real efforts, and of course, regulator and ecosystem, and everybody has to make an effort.
Sure, absolutely.
Yeah,
absolutely.
Yeah. Yes.
Sir, I have an observation. This will be obviously everybody's frustration, but I'm just voicing it. That people who want to do good governance, are they allowed to do good governance? Because recently, few months back, real estate industry put together a whole representation giving out the breakup of the costs they incur for projects. And some of the costs were completely out of ordinary, or they've become ordinary over time. I'll give you an example. There are so many private equity funds of vintage 2007, and over time they are obviously out of life and they should close. SEBI is pressurizing them, you have to close. Income tax has kept cases open for them and they are not closing them. So they are saying we can't close. Now between income tax and SEBI, they are just answering them, we can't do this because of so-and-so. We can't do this because of so-and-so. That is good governance. Funds want to close, and by far we haven't seen bad governance in funds so far. So I'm saying they want to do good, but they are not allowed to do good, and they are spending money rather keeping those funds open. Because they are not charging fees, they are communicating with investors, they are doing everything. They have sold all assets, but they've kept some funds pending because of the income tax demands, which are not getting settled.
The intentions are good, but they're unable to translate them into action because there are authorities getting in the way.
Exactly.
Regulations or whoever.
Yeah.
That's basically what you're saying.
Yeah.
Okay.
Exactly. And this is probably the case with a lot of companies.
Nothing that we can do to address that. That's a very complex question.
Sir, the larger issue will be when such things happen and seniors have to do things to keep things going, it will look like bad governance. And it can even percolate down to people thinking, this is passe, we can do this. It gives an impression about the company to be bad. And therefore, when we talk about giving perfection from listed companies and all, we want them to be perfect, give them perfect environment. That's the larger issue, I think, which everybody has a problem.
I'll give you an institutional answer to this, which is that yesterday we launched the directors community. You join that, strengthen that, and get that community to ask the right questions.
Yeah.
Maybe that is the way to go. We'll take one last question. Yes. Bolun.
My name is Sushoban Sarkar. Generally, there is a consensus that governance is good in the long term. And we know that in the long term, we are all dead. My point is, in the short term, growth is an existential thing. So, when we come into an existential situation, we have to think, what is the growth? 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 What governance will not be sacrificed. I mean, governance is more likely to be sacrificed. So what is the opinion of the panel on this?
You talk to the average startup guy and tell him you should have good governance practices, policies, etc. Say, we'll do it after 5 years. We have to grow now. Otherwise, our investors will ask the tough questions. So governance will be running far behind growth. I'll tell you something in a lighter vein. In the Tokyo Olympics, we had a very good sprinter in the Indian contingent. Something was stolen from the Indian contingent's camp. And they saw the fellow stealing it and running. And the manager told this sprinter, you go and catch him. So he ran after that chap. Both of them disappeared from sight. And after some time, the legendary sprinter appeared all alone. And he was asked, did you catch him? He said, catch him? I overtook him. Right? So that's the only known case where the policeman ran ahead of the thief. Otherwise, you will always have people who are running behind. Governance is playing a catch-up game, but it shouldn't be too far back. If you expect it to run parallelly, that is more hope than expectation.
Let me
Also,
add to
governance is not just something at the top. When you're growing, you have to ensure that all your systems are in place for that growth.
Practices,
your
controls.
policies, practices, processes, etc. And it is actually enabling that growth. So this is a very systemic approach to growth.
Yes.
So I think you can't get away from it, even in the short term. And if you don't do it, you will suffer. So in a sense, good governance is essential, in my view, for short-term growth.
But Nasser,
That's why we call ourselves enablers.
Yeah.
Okay.
No, but to be fair to his question, the reality of life is that we often face serious dilemmas, okay, which frankly after organization evolves, like fully we evolved right now, an organization, right, I know my you will exist. You know, governance is, it's relatively easier to practice, but I mean, it's always important to practice, no question about it, but relatively. I can tell you my experience on this issue. The previous company which I first acquired, much before, like 2010, 12 or so, there was the company had a net worth of some 680 crores. It had a subsidiary company which was making big loss, but was not accounted for. After I took over, the auditor immediately came to me and said, Mr. Vaidyanathan, you please write this off, because there are no books in the account, right? Now, it's a non-bank fund company starting up. You write it off, you're lost, no bank is going to finance you, because you're a loss-making NBFC, you finish, you don't get funding, and you die. And it was a really bad shape. Now, if you disclose it fully, then you say, fine, your net worth is eroded. You know, if you don't disclose it, then you're fudging. Then you're no different than a Satyam, right? Or something like that. So these are like horrible dilemmas to be in. Okay? And this is not one. I mean, I dealt with it. I finally came out of it in a clean way. But I had my own ways of getting around it. I went and, talked to certain investors. I tell there's a real problem. It's a good problem going to come at me very, very quickly. I bought some time with those people. And I somehow got myself out of the hole. But things are like this. I often in the corporate life, particularly early stage, you are at the horns of dilemma and you're either way finished. And then it becomes, that's when, when we're in crisis, is when governance is truly tested, not in the good times.
Okay, we'll take one last question and then close. Yes, I see a hand going up at the back. Yes.
So listening to the last question, my name is Hemant Pandya from JM Financial. While listening to the last response from the panelist, something struck me. Wanted to ask the panelist your views. What is harder in practice, achieving discipline in growth, or having what do we say, discipline when there is higher growth? So what is harder in practice, sir?
Sorry, what is it? Discipline or growth?
Yes. The mother question that you posed. Yeah.
Nasser,
That's
go
the
for
mother
it, man.
question.
Yeah. You're the
No,
last
sorry, your question is, do you
So my
have
question
discipline
is-
or you have growth, is it?
My question is achieving discipline, achieving growth with discipline, or having having discipline when there is higher growth. What is harder in practice?
I'm not understanding the
I
question.
didn't get the drift.
Yeah, I
really.
didn't get the
Yeah.
question. Are you saying that there's no dilemma between discipline and growth?
Yes.
In fact, one supports the other. If you have a disciplined approach and you have a very well-defined approach, your growth is going to come because you are doing it in a very systematic way.
So think of it like this. If you don't have brakes, you can't drive your car fast
Exactly.
enough. You won't drive it, right?
Yeah.
Because you'll So brakes are as important, disciplines as important. Otherwise, you just can't grow.
Yeah.
Okay, let's break it. Damodaran.
That's it. So each one can decide what he or she thinks. That's all that I can suggest. If you think growth should run far ahead of governance, good luck to you. If you think governance should run alongside growth, then see whether the growth is enough to sustain the company. Good. Thank you very
Thank you.
much. Thank you to my panelists here.
So thank you, Mr. Munjee, Mr. Vaidyanathan, and Mr. Damodaran for a thought-provoking and final session for this year's summit. May I now request Mr. Damodaran to please present a memento to each panelist. On behalf of each panelist, Excellence Enablers is proud to have sponsored Education for One Girl Child for 1 full year through the NGO Nanhi Kali, a Mahindra initiative. Thank you, Mr. Damodaran, for doing the honors. Let's once again give them a big hand, ladies and gentlemen.